Today we will be testing a new smart money indicator. Who am I? I am DP Roberts, and for years I've been testing hundreds of strategies and indicators, and I'm testing more every single day. I've compiled all that information into spreadsheets and used it to create a profitable trading strategy with a custom indicator. And we have an amazing community over on Discord where we help you become a profitable trader. If you are interested in getting access to the spreadsheets of all the indicators and strategies that we have tested, as well as a free trial to our custom indicator, you can just sign up for our Patreon down below. Alright, as I said, today we will be testing a new smart money indicator. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 571 different strategies. The best one so far was able to achieve a 78% win rate. That was achieved using the Academy Forex indicator and the Academy Forex higher time frame fractal candle indicator in a strategy that I'll mention later on in this video. Alright, as I said, today we will be testing a new smart money indicator. And so the source video says this fair value gap indicator changes everything. And so source video is pretty straightforward in the title. I can't find a lot of fault there. A little bit on the boisterous side, but that's okay. It could possibly change things, everything. I don't really know. Kind of a broad claim there, but nonetheless, we'll take a look at this indicator and see what we can get out of it. Now, the fair value gap, we have looked at those a few times here on the channel. Again, I won't go into too much depth about them. You can always research them to get more information. But essentially, it's something that happens within a 3-bar pattern. So basically, you have candle 1, candle 2, and candle 3. Anytime candle 1 and candle 3 has a gap in between them and they don't overlay bodies or wicks, you get a gap like this here. They call it a fair value gap, and usually it notes a lot of strength within the market in a particular direction, leaves an imbalance in the market, and price often will respect or trade back into it to then continue in that particular direction. Green ones means that it's a bullish fair value gap. Red ones mean that it's a bearish fair value gap. And so the indicator that we will be testing today is called the Fair Value Gaps Mitigation Oscillator. It's going to be this one right here. Go ahead and click on that and add it to the screen. Everything stays on the default settings. You can see it down here at the bottom of the screen. The second indicator we will add to the screen is going to be a fair value gap indicator. Just type in FVG. It's going to be this one right here. Go ahead and click on that one and add it to the screen. Jump into the settings, and the only modification is in the input. Scroll down here about midway down and go to the FVG box color, bullish and bearish, and just bump up the opacity to about 50%. And that just makes the boxes a tad bit easier, the gaps a tad bit easier to see. So let's explain the indicator just a little bit here now that you have a rough understanding of a fair value gap, or I guess a pretty good understanding of a fair value gap. There's not much to them other than what I already explained. Basically, this indicator is measuring the fair value gaps that are being displayed on price action. And so anytime there is a little notch like this here, that means that there is a fair value gap that was formed. Now, this indicator here on top will actually get rid of the mitigated fair value gaps. And so if the fair value gap has been ran through, let's see if I can find it here. There we go. So if we do something like this, now you can see a little bit clearer that these are all fair value gaps that have formed, and as price pulls back into them or pushes through them, mitigates them, and they disappear from the screen, only showing the newest and most relevant ones. So anytime you see a dash here on the oscillator, then that is where a fair value gap was formed. And what it's doing is it's measuring the number of fair value gaps in any one direction. And so as you get a push to the downside with red, here, that means that you have a lot of red fair value gaps. As you get a push to the upside in green, that means you're getting a lot of green fair value gaps. And so we'll go back in and uncheck that box. All right, finally there. Goodness sakes, running back and forth, up and down. All right, so we'll do that so that way we can see just the newest ones here. So that way this video doesn't get too much longer than what it is. Let's go ahead and get on. So what we're looking for is we're looking for the oscillator itself to start to push to one side or the other. In this case, it's pushing to the green side, and the red side here slowly climbs this line up until it hits this 0 line right here, which means that there are no fair value gaps being measured within a specific period of time looking back. And then what we're going to do is we're going to look for the first fair value gap to form, green fair value gap, bullish fair value gap to form once that line has started to trade flatlined and we have green. Then we're looking for price to respect this fair value gap. So you can see that it pulls back right here, touches it, and then gives us a green candle back to the upside, respecting that fair value gap. And that would be our entry. And so again, just to make this very clear, what we're looking for a long trade setup. So we are looking for when the mitigation oscillator down here starts to trend green. You can see green to the upside here. We're looking for this red line right here on the bottom to then flat line right here at the 0 line. Then we're looking for the first green or bullish fair value gap to form from the FVG indicator, and we're looking for price to respect it as it pulls back, touches it, and then closes back above it like it does right here. And that would be our signal to then enter into a long. So we'll put our trade right here. We're going to put our stop just right below the candle wick of this candle here and target a 1 to 1.5 risk to reward, putting it right about there. Let's go ahead and play this forward and see how it plays out. And you can see that we push up and make this massive spike to the upside, getting us to our take profit. And for a short trade setup, what we are looking for, so we're looking for when the fair value gap mitigation oscillator starts to push to the downside in red like this here. And then you can see that the green starts to come down and flatline at the 0, showing that there are no fair value gaps within this zone right here. And then what we're looking for is a bearish fair value gap to form within that kind of flatlined area. And we're looking for price to pull back to it and respect it. So you see price pulls back, touches it, comes back down, closes below it right here, respecting that fair value gap. And that'll be our signal to then enter into a short like so. Put our trade there. We'll put our stop just kind of right above the candles that touched or respect the fair value gap. And we're going to target a 1 to 1.5 risk to reward right about there. Let's go ahead and play this one forward and see how it plays out. And once again, you can see this really nice push to the downside, getting us to our take profit. Before we take a look at the numbers on this strategy, if you're looking for a profitable strategy, I highly recommend that you check out the best strategy that we have tested so far. It has been put up against hundreds of other strategies, and every single time has come out to be more profitable. I'll put a link to the video on this strategy up in the corner now, and on screen right now you will see the thumbnail to that video, so you're sure that you're getting to the right one. So you don't have to worry about not finishing this current video. Alright, let's go ahead and go over the numbers on this indicator. So we did the 50 trade test, and out of those 50 trades, we got 28 winning trades and 22 losing trades. It's going to put it at a 56% win rate. So with the 1 to 1.5 risk to reward, if you were looking to gain $600 per winning trade, your total gain would have been $16,800. On the losing side, you would have been risking $400 per losing trade. Your total loss would have been $8,800. It would have put your total profit and loss at a gain of $8,000. And so that was over about, I think, less than a month of trading, and so not a bad strategy at all. Pretty solid. Uses some kind of market maker model type smart money influences to really determine which way the market is moving and take advantage of that, so that way you can kind of ride with that kind of smart money or market maker to get kind of the best advantage to your trade. Now, during the same period of time, using the Academy Forex indicator and the Academy Forex higher time frame fractal candle indicator, we did right at 44 trades altogether. We had right at a 75% win rate, and that would have put our total gain right at $15,000. So definitely better results. If you have not already seen it, I'd like to introduce you to the newest indicator here at the Academy of Forex. It's a very simple but very powerful indicator. What it does is it helps to predict or anticipate what future price might be doing within a specific future time frame. To do this, we are aligning a higher time frame and specific candle formations, which make up the red and green tags, as well as the blocked out period of time in between these two gray lines. This indicator can be used to enhance the win rate of existing strategies or indicators you may be using. For example, like the Academy of Forex indicator, which I did a whole video on, or it can be used just as powerful as a standalone indicator. For example, when we pick up a red label like this here, what we can anticipate is price is going to make for example, when we pick up a red label like this here, we can predict or anticipate that price is going to make an open, high, low, close formation. Or when you get a green tag, you can anticipate a open, low, high, close formation. This powerful knowledge will help you align yourself with the true direction in which the market is attempting to go. If you are interested in accessing this new indicator, just join our Patreon down below. Once you join our Patreon, you'll get access to our Discord, and just go into the NQ indicator request, tag me at DP Roberts, and request access to the higher time frame fractal candles indicator. Alright, so that's going to put us at the end of the testing on this indicator here. We're going to go ahead and put this one on the yes list, and we'll move on to the next video from here.